Greg Smart-Jasser here from our CFO with another edition of Future Proof. This week we are going to continue the conversation around cash flow and how the tax system impacts on your cash flow. First thing is that you should be in a position where you are paying tax. And why do I say that? Well, if you're profitable, then you will be paying tax. So paying tax is actually not a bad thing. What we do need to do is make sure that you're paying the right amount of tax as the financial year plays out. And what we often see is people waiting until just prior to the end of financial year to understand their tax position, and they strategize their tax position in the last 6 weeks of the financial year. So there's this mad rush that goes on at end of financial year. So what you should do in relation to managing your tax position is understand intimately and accurately what your profit position is during the whole financial year. Every single month you should understand your position. And by understanding your position monthly, from a tax perspective, you'll also understand if the amount of tax that you're paying on a quarterly basis is right for your business. And what we often find is that people just simply pay the tax, the quarterly installments that the tax office tells them to pay. And there's a problem with that. The tax office assumes that you are going to pay, or you're going to earn more profit each year as each year passes. So what they do is they uplift your tax payments on that assumption. Now, if your business has cyclical profit cycles, or if your business is not as profitable as last year, or if you have any other tax minimisation strategies that you're putting in place, those quarterly instalments are likely to be incorrect or not right for your business. And on many, many occasions when we have started working with a business, one of the first areas that we look at is their profitability and then what they've paid in tax. And 9 times out of 10 we'll find that they have actually paid more tax than they needed to, which then puts pressure on cash flow. So by understanding your tax position, which means understanding your profitability on an ongoing basis, and then looking in a forward direction using your forecasts and knowing what your profit looks like going forward, then you can adjust your tax installments as you go throughout the financial year. Now, you do need to exercise some care there, because there are some pretty stringent rules around varying your tax installments and how much you have to have paid by end of financial year. So if you're not sure about that, talk to your tax consultant. But don't be talking to your tax consultant just once a year towards the end of financial year. Talk to that person all year round. Understand what your profit position is all year round, and make sure that you're paying the right amount of tax all year round. So I hope that's helpful. Another edition of Future Proof. I look forward to seeing you again as we continue the conversation around optimizing cash flow.